Hi there, and welcome to another TU-Automotive webinar. Today's webinar has been produced as a precursor to the 8th Annual Connected Car Insurance USA Conference and Exhibition. Today we're going to be addressing the OEM UBI Connection. So as automakers transform into data companies, we explore how they are aligning themselves to utilize connected car data for insurance services. At the same time, we will be looking at how insurance carriers are becoming better equipped to work and partner with automakers and the benefits that will bring to their business and customers alike. While UBI may be the first step, we will also examine the further applications for connected car data and insurance, such as vehicle maintenance and accident management, through to understanding ADAS, the autonomous vehicle, and the changing nature of mobility. I'd like to introduce our speakers for today's interactive webinar. Mr. Mike Tinsky, who is the Global Director, Connectivity and Emerging Services with Ford Motor Company. Chris Wickland, who's Senior Product Manager, Connected Car Services with Arity, and Jimmy Spears, who is the AVP of Auto Experience and External Partnerships with USAA. We will hear 3 presentations before moving on to the poll questions, where you, the audience, get to cast your vote on some of the big questions in this field. At that stage, we'll hand back to the experts to give us some insights into those poll results. If we have time, we'll also take some questions from you, the audience, within the chat function of the go-to system. You'll be able to see the chat function, and in that system, you'll be able to answer any questions you have for our speakers regarding this topic. So with that, I'd like to introduce our first speaker, Mr. Mike Tinsky, Global Director, Connectivity and Emerging Services with Ford Motor Company. Over to you, Mike.
Thanks, Andrew, and thanks for having me. I'm assuming I'm online.
Yep.
So
good.
Good, thank you. So good morning, good afternoon, depending on where you're at. My name is Mike Tinsky, and I'm just going to give you a flavor of some of the things we're seeing from an automaker perspective within the insurance industry, and some opportunities for potential change and disruption. The first one is, I think everybody recognizes that the auto insurance industry globally is quite large. In fact, it's estimated to be about a $700 billion industry, with the U.S. being a good bulk of that, around 260 billion. It's fairly fragmented. I think everyone recognizes that. It's a challenging market from a regulatory perspective, but nonetheless, there are many things that are happening in the industry right now that are lending itself to change. So I thought I'd start off with just a real quick view of how we view the world. That's from a customer ownership perspective, and what you see on the screen is essentially a customer value chain for a purchase of an example here is an F-150 truck. And you can see that after the purchase, there's a considerable amount of customer funds that are spent on other related items to support that vehicle purchase. Everything from the financing to the fuel or electricity, to the insurance, to parking and the like. And the reason why why I put this graph up is that when we put an embedded modem in the vehicles, which many automakers like Ford are doing, it could change every one of these blocks on the page, and insurance is no exception. So one of the main role I have here at the company is really to understand how these businesses could potentially change with the connectivity, and how we might position ourselves as a company to really improve the customer experience around that business. So what's happening in insurance? First and foremost is data. So in the top middle, data from the vehicles is being an enabler for better risk assessment of each and every customer. So I'm guessing most people on the line have heard usage-based insurance. That's the term that really is used to relate what is the risk profile of that customer and how they drive. We like to introduce a second factor, which is if you call the first one a customer score, meaning usage-based insurance, then we believe the vehicle should also be scored. And what we mean by that is the technology on the bottom left, which is called which we say growth in ADAS, is really improving. So these are things like automatic braking, adaptive cruise control, lane keep, blind spot detection, and the like. These technologies are really improving the experience from a customer standpoint relative to being alerted or those moments of brief distraction, helping the customer re-engage in the driving experience and making sure that we do everything we can from a technology standpoint to assist the driver. And so getting back to the data and analytics, we believe that there's a vehicle score and a customer score. And the vehicles, as they get more capable, they can make, as maybe the most extreme example, you could take maybe a very aggressive driver and make them perhaps closer to an average driver. And so the combination of the technology and the data, in our opinions, is really changing. There's obviously a lot of other trends that are happening within the industry, including the path towards autonomous. We are seeing some recent spikes, and the insurance carriers are seeing recent spikes in claims. We believe it's because of two factors. That's the number of miles driven is going up, as well as the distractions, mostly from cell phones, is also increasing. And I think we've all personally experienced that no matter where you are in the world. So just to build a little bit more upon the ADAS systems or the driver assist systems, this is some publicly available data from Consumer Reports. It's obviously more subjective than it is quantitative, but it lists the systems and the customer's satisfaction with those systems. So you can see that those are some pretty impressive numbers, and we are beginning our journey to actually quantify the numbers using vehicles out in the market. We have some experiments underway now that have vehicles with and without ADAS, and the numbers that are coming back from a claims perspective on the frequency and severity are encouraging. So that not only are the consumers telling us that these systems are effective and then they're satisfied with them, but we're starting to see the actual claim data showing the same results. So the technology is really changing, and we should start to see the real impact of this in the next 1 to 2 years. And then shifting gears to the data and analytics, there's many solutions out there for usage-based insurance. Today, many of the carriers are using plug-in devices. Some of them are using apps, and the trend is increasing that automakers are putting embedded modems in the vehicles. So as you move across the spectrum from plug-in devices and apps, and you move closer more and more towards an embedded modem, we believe as an automaker that the embedded modem data is the highest quality. It's robust. The customer doesn't have to do anything other than an opt-in to share the data, and you don't have to have any additional hardware. You don't have to use the consumer's data plan to transfer the data, and it's truly direct correlated to the vehicle. So, for example, in the case of an app, as you know, that you have to assume and use some analytics to really understand whether or not that person is driving a vehicle or not, and making sure that data is valid. Additionally, the data set is much stronger than what you can get off of those other devices. So at Ford, we've been keenly interested in this, and it's probably no surprise to anybody that the trend of the number of embedded modems in our vehicles will continue to increase very quickly. Just a bit on where are the startups here in the U.S. and some of them globally. Where are they putting their energy? And you can see that most of them are on the sales and distribution side. And I think the simple reason for that is it's where they can probably make the most impact in the quickest way. I think everybody realizes that insurance is a difficult product to go and acquire a customer, especially a new customer. Most of the estimates we hear are in the several $100 range to acquire a new U.S. customer for insurance, to get them to switch their carrier. And so many of these startups are looking to disrupt that space. But there are startups happening across the value chain, and this activity continues to increase. I mentioned earlier about customer acquisition costs. This is just some J.D. Power data that shows the magnitude of the advertising spend within the insurance business. The reason why I'm mentioning this is because if customers are buying product, and this is already true in Europe and China, but if customers are buying a vehicle, then there could be a moment there to offer insurance. And with the trend in usage-based insurance and what have you, we could, like they're doing in Europe and like they're doing in China, we could have an insurance program offered at the point of purchase, or either pre or post. And so the reason that I put the advertising dollars up here, which I think global estimates for U.S. are somewhere between $3 and $4 billion annually is spent on advertising for auto insurance. Some of that could be maybe more efficiently spent by working with automakers directly. And that's, once again, what we're doing today in Europe, and that is what we're doing through our dealer network within China. So I do believe that the model is going to shift that way for Ford and for other automakers. And there's a more efficient way to acquire new customers than perhaps the advertising route. And so just really briefly talking about some of the other, one slide each on the other markets. Europe, I mentioned earlier in the discussion that Europe is globally we have about a $700 billion automotive insurance market. Europe is estimated to be about 125 billion of that. So probably number 3 if you count Europe as a whole. And you can see the fragmentation exists there as it does in many parts of the world. So large opportunity. Everything that I mentioned around U.S. and trends in the U.S., as well as data and ADAS, are completely applicable to Europe. There are a little bit more, there's obviously some unique complexities around privacy and data in Europe that are viably overcome. But once again, a large market. And then when you look over to China, you can see over time, this is all insurance. I have another slide that shows auto insurance, but this gives you the showing of how quickly China is rising in the insurance space. And by 2025, they're expected to be the second largest global player for insurance in the world. We estimate right now China's automotive insurance market is about 100 billion. So roughly just less than half of the U.S. size market. The average policy in China is about $1,000 US. And just about everybody, at least in the Ford world, buys their insurance at the point of purchase. So our dealers are essentially selling insurance in China as a requirement of purchasing the vehicle. And the other unique thing about China that is interesting is that it is a 12-month prepay. So those customers are prepaying that entire policy, and it's a very different arrangement than what we have here. In China, relative to data and sharing, there's a lot more hurdles relative to the regulatory space. There are some interpretations of the current law within China that you cannot profit from private information of a consumer, or what we refer to as PII. There are others that interpret those are being changed very rapidly, and that very soon we may see a day when we can, as early as next year, sell data to be able to give the customers a discount on insurance, as we call usage-based insurance here in the States. So that's the slides I had, just a quick intro of how we're viewing insurance, and thank you for having me today.
From
Arity.
Oh, thanks.
Oh,
sorry about
thanks.
that.
Sorry about that.
Thanks very much, Mike.
Thanks very much, Mike. And we'll hand over to our next speaker now, Mr. Chris Wicklund from Arity. Over to you, Chris.
And thank you, Andy. Thank you, everyone. Let me put you into presentation mode. So my name is Chris Wicklund. I work in the product marketing team at Arity, focused on the automotive division. Arity, for you guys unfamiliar with it, is a insurance technology company founded about 1.5 years ago from Allstate. And in my role at Arity, I focus exclusively on connected car data. So I wanted to share some of the insights that I've gained along the way. So first, let's look at the connected car data market as it stands today. So it's estimated that about 36 million vehicles are connected in the US right now. So that would be traditional telematics services such as remote start, remote unlock, vehicle diagnostics, and then some infotainment offerings like maps and traffic and those connected services. As far as what's being produced off the line, we're seeing about 78% of high-end vehicle sales are connected, coming off the dealership lots. And it's about 32% when you look at the volume brands coming off the lots. But we expect that to change drastically. The big OEMs have already stated aggressive targets to get their new vehicle sales to 100% connected within the next year or two. So OEMs have for a long time viewed the data from connected cars as a significant new profit stream for them. But there's another aspect that we shouldn't ignore as well, which is that about 40% of consumers in a McKinsey survey said that they would consider changing car brands if that new brand offered them increased connectivity, whether it be through services or the package included. So it means that OEMs are incented for business reasons to increase connectivity, and then consumers are also demanding those services as well. So what that means is that we're going to see a significant increase in the number of connected cars in the years ahead. And this push-pull for increased connectivity is going to raise the level of penetration for connected cars. So the forecast calls for the number of families with a connected car to match the penetration rate of smartphones within the next 5 years. So it'll obviously take longer for the number of cars to be connected in the entire fleets to be, it'll take much longer for that to happen. But one connected car in the family will give insurers enough information about the risk of that household or that policy and eventually their individual drivers to start with, which means that we need to start looking at connected car data now within the insurance space if we're going to take advantage of it when it gets to scale. In the insurance space, we've been on this journey, this driving data journey for the last 10 years, where we started with OBD devices that plugged into the car to capture driving data, and we've moved and evolved into mobile smartphone data to get that driving data. And we've recently been talking a lot about connected car data, and that being the future of insurance telematics. And it definitely will be, but we view the data from connected cars as something that will be value adding and not value replacing in the short term. There will definitely be opportunity to replace the value in OBD and mobile in the longer term, but in the short term, we think that the opportunity is going to be around making the existing solutions much more powerful. So if done right and done well, a UBI program embedded within a connected car can create value for the consumer through a simpler user experience. It could be something that avoids the the necessity of sending them a device and them figuring out where their OBD port is and plugging it in, and that's assuming that they don't have something plugged in already. It also could remove the barrier of downloading an app, giving the correct permissions. Those are all kind of friction points for a consumer. If it can be seamlessly embedded within the connected car experience through the head unit, it could definitely work. Where we see a lot of the value in the near term is through these new data types that Mike was talking about in his presentation. A lot of those ADAS safety systems. There's a lot of data from IIHS around the effectiveness of those systems. So automatic emergency braking, it should be something where if it's installed in the car, insurers would consider giving it discounts. Right? And how much of a discount matters on the effectiveness, and that matters across brand and supplier and all that. But then the connected car also helps us understand whether or not those systems are turned on. Because there's a good portion of people that either don't trust or had a bad experience with those active emergency braking, and they turn it off. So maybe they don't deserve those discounts. And then there's the other systems and how the driver interacts with them. Information being like the blind spot monitor, the little orange triangle in our rear view mirror or side view mirror. Are drivers ignoring that? And if so, what's the impact on the risk? And should we adjust to that? Longer term, you're going to see things like drowsiness sensors become more pervasive and move down from high end to low end. We're seeing a lot of gaze detections. You can start to measure the distraction of a driver. And then beyond that, biometrics happening, measuring mood, stress level, heart rate, perspiration. These are all coming into high end lines, and they'll eventually move down into the volume lines as well. We also see a big opportunity using connected car data in areas of generating new lines of business. Now, leads from connected car data are valuable, but using insurance-grade driving score that you can price on is that much more valuable. Because if you can then take that lead with an insurance-grade driving score and then reach out to them with an exact quote, that increases the value of that lead tremendously. And then being able to connect back to the consumer, whether it's through the vehicle's head unit or through the OEM's companion app, is going to help complete that loop. We also see a significant opportunity when it comes to scoring drivers in advance. Right? So the reactive approach to scoring drivers when it comes to if they call in or if they go online, if you have that driving score in advance, you can give them a much more competitive quote and reduce and avoid adverse selection in the long term for your businesses. So obviously these aren't without their own roadblocks and challenges of their own. Data rights and data ownership, opt-in is going to be the first thing that everyone needs to take care of. Some OEMs are packaging free connected services in exchange for that opt-in to share. Other OEMs are making an insurance program. Whatever the approach is, that data rights and opt-in is step one. And a lot of it's going to come down to the consumer's perception of the value proposition. Consumers have to perceive a fair exchange of value. They have to know that if I'm sharing my driving data, I'm getting this in return. And as long as that's transparent and fair, they're going to accept it, or at least a good portion of them will. And then the final roadblock that we see in this industry is building the right and effective partnerships for data delivery and your business models. There's not a single partner that can do it all. You're going to need to partner with many providers if you don't want to get locked out of the upside that exclusivity would bring to you. So things to look at when you're looking at partnerships, you're going to need a partner that can blend together multiple sources of data. OBD and mobile are table stakes when it comes to blending it with connected car, but then also being able to blend it with Bluetooth beacon data, telecom data. Telecoms are starting to share some data, connected dash cams, large third-party app providers. All of these are sources of data that then need to be merged together if you're going to be able to monetize through your channels. The other part is going to be making sure that they can manage multiple programs. Whether or not you want to do ads, leads, usage-based insurance, enhanced usage-based insurance, any of the other things that we talked about, your partner is going to be flexible and need to work within your requirements to support your business needs. And then finally, being able to connect back with the consumer to close that loop. Whether it's through the connected car, head unit, companion app, or through mobile apps and third-party ecosystems within the IoT space, that third-party provider is going to need to connect with the consumer to make sure they can monetize those ads, leads, or insurance offers. And lastly, to focus on the long term, your insurance telematics platform partner really needs to have an eye focused on the longer term. We're seeing vehicle subscriptions starting to happen with insurance bundled into it. As Mike alluded to, point of sale is going to change in the long term. Vehicles are going to be shared and not owned pretty fast if they aren't already. Cars are starting to drive themselves. And so this is going to lead to increases in utilization. Right now, utilization is at 4%. We're going to see that increase, and we're also going to see new forms of transportation. All of this is going to lead to an increase in connectivity, and you're also going to see the convergence of 5G and DSRC create new opportunities for insurers when it comes to V2V and V2I opportunities. And that's where Arity is making significant investments in these areas so we can continue to innovate in new ways to create value for our partners. So are you ready to take advantage of the connected car data in your business? I'd like to connect and discuss. I'll be at both TU shows in Detroit in the next couple weeks, and then in Chicago a couple months after that. Stop by the booth or shoot me an email. Love to connect and chat. Thank you very much.
Thanks very much, Christopher. And we do have some good questions coming in from you, the audience. So I'd encourage that. So please do carry on sending in your questions, and we should have some time at the end of the webinar to address those. It does seem that Jimmy Spears from USAA has encountered some technical difficulties. So if we can't get him on board, I think what we'll try and do at the moment is launch the first poll question to the live audience. And the question, as it reads, is what is the most important application for connected car data? And there you have the answers available to you. So developing UBI products, developing mobility products, working towards connected claims, understanding ADAS capability of a vehicle, or E, other. And we'll just give you, the audience, a moment to vote on that. And we can see that you are voting in your numbers, so that's brilliant. And we'll just give you a few more seconds before we close that off. So we can see that we have a favored answer of A, developing UBI products, which is registered at 27% of the vote. And B, we can also see, so a close second, which is answer B, developing mobility products. Well, we can't see the answers up on the screen at the moment. We will just offer our speakers an opportunity to make a quick comment on those answers. And as I say, the answer A was the most popular voted for answer, which is developing UBI products. So, Mike, I'd just like to offer this to you. We do see a lot of different reasons for people using connected car data, but developing UBI products seems to be the most favorable use case today. Do you agree with those comments?
Yeah, I mean, I think those are spot on. As I mentioned earlier, I've had responsibility for the full value chain and looking how connectivity and what businesses we can set up, and UBI keeps bubbling to the top. We're estimating right now in the U.S. about 10% of policies have opted into a usage-based insurance. I know that those numbers can be debated a little bit up or a little bit down, but that's about where we believe things. But we're seeing the growth rate of especially new policyholders going and opting for sharing their data in exchange for a more high-value policy continues to increase. And in fact, we've talked to some insurance carriers who are seeing very high double-digit conversion rates to usage-based insurance. So it's really a high growth area. I do think that we're going to hit a tipping point where the customers that choose not to share their data potentially will see higher premiums, and that will be a further motivator. So yeah, completely agree with the poll.
Fantastic. Chris, I'll just give you an opportunity to cast your opinions on the results of that poll as well. Number D there, understanding ADAS capability of a vehicle. This is something that Mike and I have spoken about at length. The idea that you have ADAS systems in the vehicle, but we don't quite understand when those systems are on and off, what the limits are for those systems, what the parameters are. Do you see that being an increasing application, increasing use case for connected car data?
Yeah, definitely. I think that's one of the biggest opportunities we have in the long term paired with UBI, and really for the simple benefit that everyone wins in that scenario, right? I mean, you can think about auto manufacturers can potentially sell more of those systems because they're able to pair with insurers to say, well, you get a 10% reduction if you buy and equip this safety system. So then that makes the total cost of ownership of that vehicle go down, and the consumer wins because they're paying less in insurance and their vehicle's safer. So I think auto manufacturers, insurers, consumers all win in that scenario. But that second item, B, is also interesting to us because mobility patterns and mobility behaviors are changing, and we need to learn and evolve with that. So I think that's more the longer term. I don't think that's going to happen in the next year or two, but that's definitely where on the time horizon of 5-10 years, that's a much more important thing as well.
Okay, fantastic. So we'll get ready to launch the second poll question to our audience, and that is, we'll see that one. Yep, there we go. So what element of insurance business changes most with the advent of connected car data? So here we have the options again for you, the audience, to vote on. Number A, there we go, letter A even, customer touch points and relationship, or B, claims resolution, C, accident management and repair, or D, other. And again, we'll just give you, the audience, a few moments to cast your vote. As Chris has already mentioned, that Arity will be at Connected Car Insurance USA 2018 on the September 5th and 6th in Chicago, and also joined by Mike Tinsky from Ford, who are going to be coming along to give some interesting announcements about Ford's involvement in this space. And obviously, Arity will be hearing about some of the innovations that they've been producing in this industry. So I think we've had a fair chunk of the audience voting so far, and we'll just get ready to close that off. So here we have quite a clear winning answer. So customer touch points and relationship does seem to be the most definitive answer for how connected car data is going to change the insurance business. Chris, I'll start with you this time. It's a bit difficult to disagree with those results.
No, certainly not. And I think it's spot on. I mean, I think connected car is definitely an area which you're showing an increase in the touch point and where you can reach out to the consumer, right? And it's partly because of the broader opportunity that connected devices within the broader IoT space allow insurers to connect with them, right? So the old model of having a one-to-one communication through your traditional channels is evolving into connecting with them through vehicles, through mobile apps, through whatever that ends up being for your specific strategy. But that's definitely one of these areas where you're going to see growth beyond just connected cars.
Sure. And Mike, I'll just let you sort of cast your opinion on the results of that poll. Claims resolution is something that insurers have been pushing for the use case of UBI and connected car data, but it really seems that it's more swinging towards customer touchpoints relationship, although that does fall into claims resolution as well, I suppose.
Yeah, it does, and I would echo Chris's comments. There's a lot of things you can do with the customer touch point. I mean, most customers today have their insurance policy, they either work with their broker or go online and maybe get an email once in a while. So the concept of feedback can potentially really be impactful. But I think D is also an interesting one, the other. And I think, as we talked earlier, and Chris talked earlier as well, that we all know that there's a couple inefficiencies which are fairly large in the insurance space today. One is leakage. So this is maybe customers not necessarily being completely forthright with the information they're sharing and how much they drive and where they drive. But also, it's well known that good drivers in many cases are subsidizing the higher risk drivers, and UBI, our connected vehicles, is the equity holder, is the one that will rectify some of those inequalities. So I think that A and D will likely emerge at the top.
Okay, thank you very much. And we'll just get ready to launch the final poll for today's webinar. And that is, what does being a digital-based insurance company enable? So A, greater integration into IoT. B, flexibility to work, compete with insurtech startups. C, resilience as tech giants and OEMs enter this space. D, adaptability to connected AV and mobility trends. And then you do, again, have the other option. So again, we'll just let the audience have a few moments to cast their vote. But interesting, and does feed into this question quite nicely when we talk about the mobile phone, that digital front end that insurers are now using. And with insurance companies going through digital transformation, we do have to think how this is going to affect auto insurance specifically. Again, all of these topics we're going to be looking at in depth at Connected Car Insurance USA 2018, September 5th and 6th in Chicago. So please do check that out. Just have a look at now, and I think, again, we've had a good number of the audience voting, and it does seem to be we have a clear winner, so we'll just close off the voting. And there you have the answers. So it does seem as though that adaptability to connected AV, autonomous vehicles, and mobility trends holds the majority vote with the audience. So Mike, I'll just lend this over on to you. Connected AV and mobility, that's very much stuff that is just lying with the automakers, and mobility, shared services. Obviously, we're going to be talking about autonomous fleets into the future, and how people are using those. But yeah, again, Mike, any disagreements there? Any sort of how do you feel about those results?
No, I wish I could take a counter argument, but it looks like the poll would be just how I would do it as well. I mean, it's no surprise, right, that the world, and especially around mobility, is changing very rapidly. I can't imagine if there's many people that haven't participated in a rideshare or any of the other latest ways of getting from point A to point B. And insurance is going to have to evolve just as quickly. And I'd be surprised if every insurance carrier doesn't have a digital-based insurance plan in their back pocket, or either under development or ready to launch. Every business in the world is going to be going digital in some fashion, in some way, and absolutely the connected car is going to be one of the key enablers for disruption here as well.
Okay, and Chris, what's Arity's take on this? What's Arity's stance when it comes to these mobility trends and AV? Is this something, and I presume it is something that you're gearing up and working towards right now?
Oh yeah, I mean, as I alluded to in the end of our presentation, vehicle connectivity is setting us up for changes in mobility, changes in who drives the vehicle, whether it's a computer or a human. So that's definitely where we're going. But I almost feel this question is unfair, because it's the answer is really all of the above in a lot of ways, right? You could answer any one of these, and you're all correct. And a lot of it comes down to being a digital-based insurance company gets you speed and flexibility that you might not get in other channels, right? So you have the ability to learn fast, adapt from your learnings in small-scale pilots, and then you can go to market faster from your learnings, right? So you can quickly iterate and learn, and then go really, really fast. But that also gives you the flexibility as you grow and as you need to pivot into new markets or new verticals. Being a digital company helps you expand quickly into those areas, and being a database company allows you to go horizontally as well as vertically.
Fantastic. So just to the listening audience, we will collate these answers as well as the commentary from our speakers today. So do look out for that as we send it around. But we're going to move into some Q&A now from the audience. Just to start, we have a question. As we utilize telematics and remote vehicle maintenance systems to pre-order certified repair parts to reduce repair cycle times, would you allow your customers to participate in development pilots, knowing that there would be a learning period and risk of increased cycle time and incorrect parts ordered until the algorithms are developed? I guess we're asking here, are we ready to fail before we can learn? Mike, I'll ask you that question.
Should I answer your question or the other question? I think, that's a really interesting question. I think it's two parts. The first part was, is there a way that we can continue to use sensors and what have you on the vehicle to understand what the first notice of loss or the claim might look like, rather than using an adjuster to make that call? And I think we're a ways away from that. But that's not to say that we're not trying. We've got a couple things going. We have a project that we just launched at Georgia Tech to start exploring that, and we also have an experiment running with with about 500 of our employee-owned vehicles, they're Ford-owned vehicles that employees drive. And that experiment is showing us we're seeing all the sensor data, and then, as you know, we're self-insured, so we see the claim data. And so we're comparing what the sensors told us what the accident would look like and what the repair would look like, and then comparing it to what the actual claim came out to be, and trying to make that, trying to make a model as we continue to evolve. And like I said, we've got a long journey on that one. And then the second part of the question was, can we use customer information, and can customers participate? I never say never. It's just you need a large sample size, and you need to have claims data as well as the data analytics, and that requires multi-party. And if there's an opportunity to do multi-party pilots, we're ready to listen.
Fantastic. And Chris, I'll just give you an opportunity to answer the same question.
Yeah, I think it's always great to create small pilots and learn from it. We find that smaller group pilots, whether it be initially internal employee testing groups or small customer groups, is a way of learning quickly and then getting things right. So then when you scale to the larger population, you don't have any issues. And a lot of that comes to the transparency that you give with those initial pilot groups. One of the areas I think that this really can help in when it comes to accident reconstruction, parts, costs, all that, is when it comes to the total loss category. We're finding that there's a significant brand defection that happens when a total loss event happens, meaning the vehicle's totaled and it's a bad accident. So they're likely to defect from the OEM, and there's a good chance they defect from the insurer as well. So you have common ground where the insurer and the OEM can come together on finding the right solution during a very emotional time for the driver in this situation. Okay,
thank you. And then I have another question from the audience. A few questions, if we've got time. We do. So, can we talk about the vision for connected auto claims? Who gets the work? What parts are used? Chris, if it's okay, we'll start with you on this one. Connected claims.
Sorry, can you repeat the question?
No problem. So here we're asking the vision for connected claims, and who gets the work. So I guess what are the workflow processes there, and what parts are used?
The parts question is interesting, right? Because that's the big debate. Is it OEM parts versus non-OEM parts? And that's probably the challenge that the industry needs to get over if this thing's really going to work. And then after that, the claims, I mean, there's a lot of claims technology that's evolving, whether it be through quick photo claims that are happening, or whether it be the video conferencing that's available in the shops. I mean, that's a whole different conversation that we can have around how does that experience improve over time, but then also what are the OEMs and insurers going to do together to make sure that that parts cost number is something that they can both agree to.
Sure. And Mike, the same question. I mean, the whole parts question is a big matter, obviously, for automakers. There's a lot of revenue dependent on getting vehicles back to dealerships, whereas insurers may have a slightly different strategy. What's your take on that when it comes to connected and automotive claims?
Yeah, I think it was articulated well. It's a bit of a a challenge for both automakers and for insurance carriers today. I have a personal opinion that I don't think the consumer at this point is fully aware whether or not they're getting a genuine auto part or not. That, though, I do believe is changing rapidly. So in our informal online surveys, we've asked questions of some customers that have recently experienced a claim, and some of them were aware, and some of them were given an option to take 100% genuine Ford parts in this case. But the ones that weren't aware were quite disappointed to learn that it's standard practice to not necessarily use all genuine parts. We're obviously biased. We like to say keep a Ford is the parts mantra, and I think there is some creative and call it a triple win solution so that we can continue to use genuine Ford parts in general, automaker parts in general across the board.
Okay, thank you. So we have another question in from the audience, and this is related to the commercial line. So are commercial vehicles moving at the same speed as personal in terms of adapting to the new technology? Chris, how much business is from Arity is focused on commercial lines, and what's your take on that question in terms of technology adoption?
Well, I mean, you can broaden commercial to include shared mobility providers, and that's where we see a lot of growth in this industry, and all those providers are connected, right? So how quickly can you get them integrated within our technology? And then, but there are some common problems, right? A lot of these commercial vehicle providers, the shared mobility providers, they're paying way too much for insurance because a lot of people will have a hard time pricing them. But if you use the same common UBI technology of how well do they drive determines how much you should charge them. You already have 100% connectivity in that space, so there's a natural synergy between those two markets in the longer term.
Okay, and Mike, when it comes to this vehicle technology adoption, commercial lines, is that something that Ford are looking at?
Well, it's an interesting question because the data right now is not showing connected vehicle or usage-based insurance catching on within the commercial space at this time. And I think it's not necessarily because there isn't a demand, it's because of the way that whole channel and the market currently is organized. So for example, I think most people know, or a lot of people know, that once you reach about 25 vehicles or higher, you generally are self-insured rather than an insurance policy with a third party. And so these are larger companies, mid to large companies, and we do believe, and we have been talking with them, that even though they're self-insured, there's a real market for data. So they want to know, for example, are there any of their drivers or employees or what have you may need, that are safe and some that aren't, and they'd like to know who both of those sets are, and maybe take some action around that. And that's not necessarily to reduce, it's not necessarily to reduce premiums, because in this case it's self-insured, but it's basically to make their company and have a safer workplace. So there is clearly commercial opportunities, even in the small businesses that's less than 25 vehicles. They typically go through a broker. They get all of their insurance needs captured in with one broker. That model is evolving very rapidly in the digital world as well. So we might not see it quite as quickly as the retail space, but once the retail space takes off, we believe that the commercial space will be soon to follow.
Okay, fantastic. Gents, I'll leave it there. We've baited you with a few great questions from the audience, and thank you for those. We do have the recording to send round to the entire listening audience, but I'd just like to thank you once again for tuning in. Thank you to Mike Tinsky and Chris Wickland, and you can hear from both of our speakers at Connected Car Insurance USA, and if not before, at TU-Automotive Detroit in just a few weeks' time. So from me, Andrew Pym, thank you very much for your time today, and gents, thank you very much for your time.
Thanks, Andy. Thanks, Mike. Thanks, everyone.